Yeah, all right, Adam, sit tight. I'm going to bring in another super smart voice to the conversation and welcome in our friend Victoria Fernandez of Crossmark Global Investments. Victoria, Merry Christmas, Happy New Year. Thanks for coming on. You listened very patiently with what Adam had to say. Adam's not super bullish, by the way, on the Federal Reserve, but I know you think there's a chance, they may not cut it all next year?
Well, I think they'll probably end up cutting next year, but I think it's definitely going to be in the second half of next year. The market has priced in, almost 100% chance of a March cut, and I think that's just a little too optimistic. It's probably one of the main reasons, along with some other risks we see, but one of the main reasons we think there probably will be a pullback in the first quarter, or at least more volatility, as that extra kind of 50 basis points that the market is anticipating versus what we saw in the dot plot gets priced out of the market, because the market is absolutely priced for perfection right now on a soft landing, and we just don't think that's going to happen. The only reason we see the Fed cutting in the early part of next year is because they are concerned about the economy, and we're starting to go into a mild recession.
Mild recession. If so, if you're right, what would that mean for equities generally then, Victoria?
Yeah, I think we're going to see a pullback in equities. Obviously, for the near term, for the imminent future, the path of least resistance is higher. We've got the small and the mid caps actually outperforming large caps last week. So we have that broadening in the market. We have the seasonality. We have consumer sentiment that is strong. So we expect the market to continue to go up here in the near term. But we think these things are going to start working their way through the economy in terms of the hikes that we've had, the leading economic indicators. It's in the name, Brian, right? And we've had 20 months of leading economic indicators coming down. We've had PMIs and manufacturing numbers that have not been good. Look at the Philly Fed. New orders plummeted and prices went higher. So there's different information out there in the market. I think a lot of people try to choose one camp or the other to make their case. But if you take everything in together, I think you have to be cautious and expect some volatility and a pullback as we go through the first half of next year.